afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 12th of December and we have as our guest Teng, Markets Analyst at CMC Markets, as our guest today, coming to you out of Auckland, New Zealand. Now, Tina, it's always great to have you on the show.
Hi, Brian. Thanks for having me.
Now, Tina, there's just a news flash earlier this morning that India has overtaken Hong Kong to become the world's seventh largest stock market. So the National Stock Exchange of India was valued at 3.98 trillion versus Hong Kong's 989 trillion versus Hong Kong's 3.984 trillion. So that's quite a momentous occasion. And obviously, what's your view on this, particularly given the fact of the size of the Indian economy, the attractiveness? What's your take from a general investor perspective?
So obviously, India had a surge in its economic growth this year, which outperformed the other major economies, especially in this global headwinds. I think the economy GDP growth reached about 7% year on year in the last quarter. So obviously, economic growth wise, it's strong growth, but there might be some downsides about the Indian markets. It's as most investors are not very familiar with the markets, and they still have issues with the transparency of the markets, and the recent news indicate there might be a monopoly in the market just by those big institutions.
And so this is an interesting thing, right, Tina? There's a lot of upside potential of India, but there's also a lot of risk around it because, for example, India is not an easy market for foreigners like you and me to go and invest in. And for all the reasons that you mentioned, I think that perhaps when there's more liberalization, there's probably even more upside to the Indian growth story in the stock exchange.
Yeah, that is a hurdle for if you can access the markets directly, especially if you buy the India shares into transferring money into the Indian rupee. I think there will still take time for investor to directly invest in those markets and get more to know those markets.
Now, okay, coming back to familiar territory, Wall Street rallied ahead of the CPI's numbers today. And of course, investors' eyes are on the Fed on Thursday. What's your view on markets looking ahead for the rest of the week?
So it's a bit the story that the Fed actually doesn't want to give up its higher for longer rates hawkish stance. However, the markets believe that as the Fed will reach the peak of rate hiking cycle. That's why the stock market risk asset actually have been rally throughout November into December. But I think there will be still cautious movements ahead of the CPI data, even though the consensus calls for a steadily cooled inflation of 3.1% in November from 3.2% in the previous months. So I guess just the long-term trend, market still pricing in end of Fed hiking cycle, which weaken the US dollar and boost the stock market's movements.
Now, we've also had a pullback on cryptocurrencies with Bitcoin in particular. What's the reason for this, and what's your outlook for Bitcoin from a trading perspective?
So from the technical perspective, I could see there was a bearish divergence move in the chart. So it's the number one reason. And from the macro point of view, I think just the recent US dollar strengthening again, which pushed down commodity prices as well as cryptocurrencies like gold fell back down below $2,000 per ounce from a record high last week. At the same time, the Japanese yen weakened too. So this is a volatile time, and there's a lot of bets around monetary policies and the macro views.
Tina, as always, thank you very much for your insights. Thanks for coming on the show.
That's Brian.
Now, we've been speaking to Tina Teng, markets analyst at CMC Markets, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out the show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks again for tuning in.